XDC is quickly becoming one of the biggest projects out there, and one of the largest upgrades are around the corner, and that is, of course, XDC 2.0, which is launching in the beginning of October. But outside of that, we have a lot to talk about. So welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So let's dive on in real quick, and let's actually start off with XDC 2.0. We have here Protocol Village exclusive, the only layer 1 protocol that can achieve BFT accountability through forensic monitoring. XDC Network plans 2.0 upgrade in early October, bringing forensic monitoring subnets. Protocol Village exclusive, the XDC Network says it will upgrade to 2.0 on or near October 2nd. According to the team, with its CertiK audit now complete at XDC 2.0 when launched, will be the only layer 1 protocol that can achieve BFT accountability through forensic monitoring. XDC is also introducing a user-friendly architecture for subnets, including a generator, manager, sub-swap interface for moving tokens across subnets or the mainnet, and the XDC Zero app for cross-chain interoperability. Any XDC subnet will be as secure as the XDC mainnet and should be a key driver of institutional adoption. And there you guys have it, institutional adoption. It is the focus of almost every single network now, because 2024 is the year of institutionalization. I don't think that I even need to mention that, considering the fact that BlackRock's here, Fidelity's here, all of the major banks are here. We continue to see a lot of talks about Bitcoin trading and crypto exposure now. Institutions are here. They're here, they're embracing the space, they're embracing the technology, and this is only going to grow and grow and grow. And these upgrades, like for an example, XDC 2.0 around some of these networks, are truly massive announcements, because they open up doors of opportunity that were not there before. So I'm actually very excited about this when it comes to XDC. Now, outside of that, if we actually look a little bit closer at XDC, this is POS 2.0. We have in the heart of the XDC network beats a groundbreaking innovation, the XinFin Delegated Proof of Stake Consensus Protocol 2.0. As the digital ecosystem undergoes constant transformation, our solutions keep pace with this evolution. Say goodbye to the inefficiencies of the past and embrace a future where trust, accountability, and security converge seamlessly. And down here we have introducing blockchain 4.0, XDC POS 2.0. We have masternode election, the hot stuff protocol, and also the reward mechanism. Now, this is all a part of 2.0. We have swift finalization, unparalleled security, transparent accountability, incentivized collaboration as well. And also we have the tech spec itself from xdc.org. This is a little bit of a breakdown around this. If we scroll down a little bit here, we have the XDC or XDPOS. We have a proposed forensics-enabled consensus mechanism termed XDC 2.0 is built upon an advanced BFT consensus protocol and will guarantee absolute zero forking in the finalized blockchain as long as the ratio of adversarial masternodes in each epoch does not exceed 1/3. The block time will be faster with the adoption of XDC 2.0, but most importantly, after the adoption of XDC 2.0, confirmation is finalization, meaning transactions will be finalized 6 seconds after their inclusion in a block. Also, it builds off the original XDPOS consensus mechanism by introducing a BFT committee, which is a set of masternodes selected using a deterministic and verifiable algorithm at the beginning of each epoch. The nodes aim to reach consensus using the advanced BFT protocol, chained hot stuff, and have the ability to identify malicious actors with cryptographically proven or provable forensic evidence. So this is actually going to allow a lot more trustworthiness to be added to the network for institutionalization, enterprise players, you name it. In the unlikely event the ratio of adversarial masternodes exceeds 1/3 during the epoch, those adversarial masternodes will have to sign and certify certain messages that will be embedded into the blockchain in order to violate the safety of the network. These embedded messages can be accessed through on-chain forensics monitoring and used as irrefutable evidence of misbehavior. The holistic integration of accountability and forensics within the blockchain positions XDC network as a uniquely secure and well-monitored blockchain protocol. This is definitely going to be a game changer. I'm very, very excited about this, and I also think that this is coming at a perfect time. Listen, institutions are here, like I said. Now, Outside of that, let's talk a little bit more about tokenization of trade finance. So it seems as though now everyone is in on the secret that trade finance is probably going to be the first major market to be fully tokenized. It just makes sense. There's a lot around trade finance that is yet to be touched by, digital technology, tokenization. And as we really look at this, right, there's a lot of money behind it as well. And we even have here, tokenizing trade finance on the blockchain transforms traditional trade processes by enhancing transparency, efficiency, and liquidity. The immutable nature of blockchain ensures secure and verifiable transactions, while smart contracts automate and enforce trade terms. This innovative approach not only mitigates risk associated with fraud and compliance, but also opens new opportunities for liquidity in trade finance through secondary market trading. As blockchain technology continues to evolve, its application in trade finance promises to revolutionize global commerce, making it more resilient and transparent. And talking more so about this, it's funny because, just recently, Standard Chartered put out a full report on tokenization within global trade. And if we scroll down, we could see tokenization in trade finance. Why now? Let's zoom in real quick on this. So as tokenization brings unprecedented levels of liquidity, divisibility, and accessibility for an asset class that has been perceived as complex over the past decade, the current macro and banking environment acts as a catalyst for adoption. The missing middle, unlocking the multi-trillion-dollar opportunity and bridging the trade finance gap. Global trade is projected to grow by 55% over the decade, reaching $32.6 trillion by 2030. Global trade is projected to grow by 55% over the decade, reaching 32.6 trillion by 2030. Digitization, expanding global trade, increased market competition, and enhanced inventory management are factors driving this expansion. However, there is a critical gap between trade financing demand and supply, particularly for small and medium-sized enterprises in developing nations. Now, we already know who's there filling that gap. XDC. The trade finance gap has been increasing dramatically from 1.7 trillion in 2020 to 2.5 trillion in 2023, actually. This growth represents a 47% increase, the biggest one-period increase since the metric's introduction as well. Several factors, including the COVID-19 crisis, economic difficulties, and political instability, have made it more difficult for banks to approve funding for trade finance. Furthermore, the International Finance Corporation estimates that 65 million firms, or 40% of formal micro, small, and medium enterprises in developing countries, have unmet financing needs. And by the way, XinFin is actually trying to fix those problems. But as we really kind of look at what's going on here, there is a major market for trade finance. Specifically, there's a major opportunity here for a lot of these players in this space to really become massive winners. That's why we look at XDC. We actually have here that we are now at the threshold of realizing the potential innovation value that tokenization can bring. Organizations need to collaborate closely to unlock the true value of distributed ledger technology. We adopt an open innovation approach to this topic and are conducting multiple concurrent explorations with like-minded partners such as SC Ventures, Standard Chartered Ventures, where we are exploring new use cases for tokenized assets. And again, if we think about tokenized assets and we think about trade finance, okay, so when it comes to XDC, there is two incredible examples of tokenization of trade documents. This is actually from a major report. If we actually scroll to the top, I could show you guys. So this is global legal recognition of electronic transactions and documents. If we come back down here, these are the examples of tokenization of trade documents. We have XinFin and also TradeTech. These are two major players that are based around XinFin. Okay, they're based around XinFin, and they are at the forefront of trade finance tokenization. They're also at the forefront of secondary markets for generating liquidity and creating markets around trade finance tokenized assets. And if we think about this and we come back over here and we're looking at tokenization of, the trade finance space. Also, we're also looking at, liquidity creation. We're looking at banking the SMEs, providing funding for SMEs. Guess what? XDC is there. That's been the end goal forever now. And if we look at TradeFin, we have here, okay, what is TradeFin? It's an institutional grade ISO 20022 compliant non-custodial protocol for trade finance built on standardization and built-in liquidity of XDC network via Phantom Dollar. This is the full breakdown of it. And also, we have receivables invoice, letters of credit, guarantees, and electronic bill of lading. All of this is tokenization of trade finance. For platforms as well, they have interoperability tied to it. Liquidity, XDC liquidity. So if I'm an SME or MSME, I could instantly tap into liquidity, instantly tap into funding as well. This is very significant. And then, of course, yes, you have, TradeTech. And if we go over here, we have bridging the multi-trillion-dollar trade finance gap in 60 seconds with TradeTech. We see tremendous interest in this asset class. $15 billion plus process partners with top asset managers and banks built on the XDC network. Big shout out to XinFin for this. Check it out.
I'm one of the founders and the COO here at TradeTech. We're an aggregator of trade finance assets. We're bridging the gap between the originators of these assets, which can be banks, but more typically are platforms, alternative lending platforms, factoring companies, and the investors into these assets. By converting the underlying invoices, let's call them, into scalable financial instruments. So you have a lot of short-dated receivables, and we, through technology, convert them into scalable investment opportunities that we can place with our partners. To date, we have done this for a notional amount of about $4 billion. The platform has processed something like $15 billion. We work with some of the largest partners in this industry, including some of the very largest asset managers and banks. We see tremendous interest in this asset class.
And of course, why wouldn't they see tremendous growth and interest in this asset class? When you look at this post here going back roughly a year ago, how to navigate the transition from paper bill of lading to EBL. And guess what? Let's go back over here. They offer this with TradeTech. They also offer this with XinFin. If we go back over here, you are likely reading this on a digital device. In the last week, you've probably done your banking, communicated, and maybe even booked a flight, an Uber, or a holiday all digitally. You may even find it hard to remember when you last needed a paper document. Yet in international shipping, almost 96% of trade documents are still paper-based. 11 billion metric tons of cargo shipped every year with 44.5 million paper documents. But that is all changing. In February 2023, Digital Container Shipping Association announced a multi-carrier agreement to get to 100% usage of electronic bills of lading, EBL, by 2030. Again, let's go back here real quick on the XinFin platform. We scroll up, electronic bill of lading. XinFin offers this, and it's MLETR compliant. If we look, we could actually see that in the announcement, Digital Container Shipping Association wrote, switching away from the transfer of physical paper bills of lading could save $6.5 billion in direct costs for stakeholders, enable $30 to $40 billion in annual global trade growth, transform the customer experience, and improve sustainability. As the most important document in shipping, digitalizing the bill of lading will be the first major step in the digital revolution of documentation and shipping. But what exactly is the EBL? How does it work? And how is it currently used? And how exactly will we move to 100% industry adoption by 2030? That's what this e-paper is all about. And they do, of course, make this. But guess what? Look at all the players tied to this. You have XDC with Plug and Ply. So Plug and Ply is tapped in here. But also XDC itself is being mentioned within this. Global trade is upon us. This is insane. 44.5 million paper documents per year. Think about that. All of this is being revolutionized. There's trillions of dollars behind this industry. This is why, as we look at this asset class, XinFin is very bullish on it. All of these players are very bullish on this. TradeTech, XinFin, XDC is a powerhouse behind trade finance. Everyone needs to wake up. Wake up now to really realize how big this is going to be. And now with this major upgrade coming, I'm very, very excited about XDC. So with that being said, if you guys enjoyed this video, If you guys did, definitely leave a like, subscribe, so notifications on because more free content. You guys more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.